onto RANsquawk's new morning briefing for Tuesday, the 22nd of December of 2009. And so far, volumes, as can be expected, heading into this Christmas shortened week, are down, but not quite as light as they were yesterday. In terms of what we have seen, in terms of T-notes overnight in the Asian session, the continued downtick, we're down around 10 ticks. In terms of the European entrance, and that again coming from around a point loss we had in T-notes in yesterday's pit session, we have seen overnight the 10-year Treasury yield up at around 4-month highs, as well as the 2-10 spread, the steepest it's been ever on record, again pressuring in fixed income as equity markets trade up around 0.4 to 0.8% in the FTSE, CAC and DAX this morning. In terms of some of the things that we have seen in terms of economic releases, one of the main things from the UK was the final revision of Q3 GDP, which disappointed the market, coming in at a revised minus 0.2%, not quite as good as some were hoping for, of minus 0.1 or even potentially flat, according to some of the UK weekend press. Consequently, sterling traded lower across the board, and it helped give gilt futures a bit of a lift. Elsewhere, Moody's, they've come out and, as pretty much expected by the market, commented on Greece. They cut their ratings to A2 from previous A1. However, the cut was not as bad as some had feared, and Greek bonds have, or the Greek 10-year bund spread has actually narrowed by around 13 basis points, as well as Greek banking stocks trading higher. So a bit of relief on the back of Moody's actually coming out in that eventual cut. The outlook, though, does remain negative, so something to be keeping an eye on in the future. Looking ahead then, in terms of what things we do have to come from the US, we'll be eyeing their GDP as well as the Richmond Fed Manufacturing House Price Index and existing home sales to be the highlights today in the US session.